Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be with you today to break down the latest action in the markets. It's been a wild ride with geopolitical tensions, inflation concerns, and Federal Reserve decisions dominating the headlines. So let's dive right into the key moves and what they mean for us as long-term investors, while also keeping an eye on short-term trends. Buckle up, because we've got a lot to cover. First up, let's talk about the major indexes. It was a rough day across the board as markets reacted to a mix of economic data and global uncertainty. The Dow Jones dropped over 1.6%, reflecting broad-based selling pressure. The S&P 500 wasn't spared either, sliding about 1.36%, while the Nasdaq took a similar hit, down around 1.46%. Even the Russell 2000, representing small caps, fell by over 1.6%. And if that wasn't enough, the VIX, often called the fear gauge, spiked over 12%, signaling heightened volatility. Clearly, investors are on edge right now. What's driving this nervousness? Well, a big chunk of it ties back to the latest comments from Fed Chair Jerome Powell and ongoing geopolitical risks. Powell highlighted that inflation projections for 2026 are creeping higher, partly due to oil price shocks from the conflict in the Middle East involving Iran. He noted that near-term inflation could face upward pressure from surging energy costs, and the Fed decided to hold interest rates steady in the 3.5% to 3.75% range. This cautious stance, combined with hotter-than-expected wholesale inflation data, has markets questioning when or if rate cuts are coming. Zooming in on the S&P 500, the index is feeling the heat from these macro uncertainties. Some experts are even warning of a potential collapse if key technical levels don't hold. For us long-term investors, this kind of pullback can be a chance to reassess, but it's also a reminder to stay diversified. In the short term, though, sentiment is shaky, and we could see more downside if geopolitical headlines worsen. Over on the Nasdaq, tech-heavy stocks are also under pressure, with a similar story of risk-off behavior. Despite some resilience in AI-related names, the broader index couldn't escape the selling. Crypto markets like Bitcoin also pulled back today after inflation data disappointed, showing how interconnected these risk assets are right now. Let's shift gears to some bright spots with the day's large-cap gainers. Cloudflare jumped over 6%, showing strength in the tech space despite the broader downturn. Cheniere Energy also caught a bid, up nearly 6%, likely benefiting from rising energy prices amid Middle East tensions. And Lumentum Holdings led the pack with a nearly 8% gain, fueled by optimism around AI data center solutions. These moves remind us that even in a down market, there are pockets of opportunity, especially in sectors tied to long-term growth trends like energy and tech. On the flip side, we've got some notable large-cap losers. AbbVie dropped over 5%, possibly reflecting broader healthcare sector weakness. Amphenol and Southern Copper also took hits, down more than 5% each, as cyclical stocks felt the weight of economic uncertainty. And HDFC Bank saw a steep decline of over 7%, likely tied to global financial sector jitters. For long-term investors, these dips could be entry points, but short-term volatility might persist. Checking out the most active stocks, Nvidia continues to dominate trading volume, even with a slight dip today. Micron Technology also saw heavy action, likely ahead of its earnings report, while Intel managed a small gain amid the buzz. These names are often at the heart of market sentiment, especially in tech, so keep an eye on them for clues about broader trends. Speaking of big movers, let's look at the market heavyweights. Apple and Tesla both saw declines of around 1.6% to 1.7%, mirroring the risk-off mood. Amazon dropped a bit more, down nearly 2.5%, showing consumer discretionary isn't immune to the pressure. But Micron held steady, a rare flat performance in a sea of red. These names often set the tone, and their struggles today underscore the broader caution in the market. Now, let's pivot to earnings, as this week's calendar is packed with names to watch. Micron Technology is in the spotlight with its report expected soon, and analysts are anticipating a strong showing tied to AI demand. Other big names like FedEx, Accenture, and PDD Holdings are also reporting, offering insights into logistics, consulting, and e-commerce trends. Last week, Adobe delivered solid results, though its stock dipped post-earnings on softer guidance. These reports are critical for gauging sector health, so we'll be watching closely. You can find exclusive earnings transcript summaries on MarketSnap to dive deeper into these results and what they mean for your portfolio. Looking at the past week's top large-cap performers, Garmin surged over 21%, showing incredible momentum. Lumentum and AppLovin also posted double-digit gains, up around 15% each, driven by tech and AI enthusiasm. Shopify and Occidental Petroleum rounded out the leaders, both benefiting from sector tailwinds. These weekly movers highlight where the smart money is flowing right now, and for long-term investors, they're worth a closer look. On the other end, Genuine Parts led the weekly losers, down over 20%, a stark reminder of cyclical risks. Rivian and Blue Owl Capital also saw significant declines of around 14% and 13% respectively, as growth and financial stocks struggled. These drops can sting in the short term, but for us focused on the long haul, they might signal buying opportunities if fundamentals remain intact. Wrapping up with sector performance over the past week, industrials led the way with a solid 2.12% gain, showing resilience amid uncertainty. Consumer cyclical and healthcare also posted positive moves, up over 1.6% and 1.8% respectively. Energy, despite daily volatility, gained a whopping 4.62% for the week, no doubt fueled by oil price spikes. These sector trends are key to understanding where capital is rotating, especially as we position for long-term growth. On the weaker side, healthcare actually shows up again with a slight weekly dip despite some strength, down 0.62%. Utilities and financial services also lagged, with minor declines of 0.08% and 0.06%. These underperformers might face near-term headwinds, but they could stabilize if macro conditions improve. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and I hope this breakdown helps you navigate these choppy waters. Be sure to stay engaged with MarketSnap for more daily summaries and in-depth SWOT analyses to keep your investment strategy sharp. See you tomorrow for the next update. Stay smart out there.